What's up, you guys? It's your girl Pipsicle, and I'm going to fly through this, so I apologize that I'm talking fast. Just watch it again. All right, so this would be like charting number 2. So, you guys, let's get simple. Let's take all this crap off of our charts that confuses us, all these indicators that confuse the mess out of us. I'm not going to lie to you. The majority of indicators, they're lagging. They are behind. They don't tell you what's going to happen ahead of time. The only indicator that I found that really actually kind of gives you a clue into the future movement is the Ichimoku. And I'm probably saying that really wrong, but it's the Ichimoku indicator. Other than that, everything else is the lagging indicators. All these American indicators are lagging indicators, okay? I love the harmonic scanner. That's awesome. So I'm not really referring to that, but the Ichimoku, the Japanese cloud, and all that fun stuff, man, that thing is the only thing that kind of shows you future price movement. But even then, that's still a lot to look at, you guys. So start off, yeah, draw your levels, draw your zones. But this is going to be number 2 when you're ready to move forward and simplify your life. All right. So what I did is I went in here and I marked these zones, and I marked these zones on the monthly, okay, because I can see here that they tapped for liquidity, all right, the big market maker people. They tapped here for some liquidity, and what did they do on the monthly? They drove it down, right? So this is where we're at right now. What is this, June? So let's just use my thing because I don't want to count all these months. So this is what? January. So look at this. So they first they come down here. They collect all the people's stop losses. They're collecting all your money, okay? They're taking all your little pocket change, right? And what did they do? Boop, drove the market straight up. Then they took everybody's money who was here and did what? Drove it straight down. You can see there's a lot of little indecision going on right here as to who's going to win this battle. But I marked these because they're liquidity zones. Liquidity zones meaning they're coming in, the market makers, they're taking all the retailers like money and whatnot, right? And again, this is like my little kindergarten version of explaining this. Okay, I'm not technical. All you technical people, go watch the technical video. So they're coming in, they're taking all your gas money, they're taking all your funds, right? And then they're going to drive it down, okay? Because they need you. They need your money. They need your gas money in their vehicle to be able to push it the way that, or drive it the way that they want it to go, all right? So I marked my liquidity zones on the monthly. Now I'm going to go down to the daily here. See if we can find our zones. Zoom out. Oh, boom. There they are. All right. So there's our liquidity zones. Now, I want to show you guys something because when I did this, I hadn't looked at this. You can see my markings because I tried to record a second ago. It didn't work out too great. But I got super excited. Okay, when I hit the daily and I saw this, I'm like, yeah, look at that. Look at this wick, you guys. Here the market is trending down. Okay, so you see the market, it's trending down. What did they do? They came in, they took all your gas money, okay? And then they brought it back up, okay? So they came down again, took the gas money, right? And what did they do? Push it back up. And they're coming in, they're tapping for liquidity, right? They're fueling their tank with all your money. And what did they do? Boom! Shot it right back up. And look at even here, one last time, right? So that's what's happening. Let me get rid of this really quickly. So the reason that I have other lines down here is because what I was suggesting that would have been a great idea, and maybe some people would have been fooled. A lot of retailer traders maybe would have seen this come all the way down and thought, oh, that's a huge push to the downside, right? And they might have hit in there that, oh, we think it's going to keep going. And they might have hit a sell and went short. And that was a mistake because they came back up, right? Comes back down. They're thinking, oh, I'll stay in this trade. I'll stay in this trade. And then shoots back up. But what I was saying was a good thing to do is place your stop loss here. All right. And then here, come in and place your order. Right? So hard to see. Right? Place your buy order here. It's going to push back up, right? It came back down, but your stop's down here, so you're still protected. And then look at that. It shot straight back up. So you guys, that's a lot of pippage going on, right? From here all the way up. Okay? So, again, let's just look at another example. We're going to scoot. Oh, fail. Right? We're scooting it over. And they did the same thing here. So they come in, they tap for more gas fuel, all right? They're getting all that liquidity, right? And then they're pushing the market. They're driving it down, Okay, so what I'm looking at on a bigger time frame, and I'm not calling anything right now because I haven't finished charting yet, but I'm looking for either a push up here to collect, right? And then follow that bigger monthly trend in the downwards direction. Okay, so that's what I'm looking for on a bigger time frame. Again, please do your own analysis. I haven't even got that far. I'm just showing you guys how to look for liquidity. Okay, so you can also go down. Let's look at the 15-minute. All right, ugh, a lot of wicks going on here. That's that little zone of liquidity that I highlighted. You can see that there. Look at that. Boom, boom, boom. That's the refuel. Okay, refuel. Push it down. I'm going to shoot back up because I ran out of gas down here. So I took all these people's gas. I'm coming up, taking your gas money. I'm going down. Look at this. It's just like redundant. Okay. So another thing that I noticed when I was on the 15-minute, and again, we're looking more for zones. Okay, that is a bad line right there. If you do this one on the hour, you can really see the pinch, but you can kind of just see here how it's kind of getting it to a tight squeeze there, which kind of tells me, all right, there's going to be a push going to one direction or the other. And when they do that push, obviously you can see a lot of wicks here, so there's some liquidity there, but I don't trade 15 minutes, so I'm not even going to look into that. But as you can see here, that's what's happening. Look at all these wicks. They're testing here. Which way do we want to go? They're testing here. Nobody's winning this yet, okay? So it's because it's in that squeeze, it's going to break out to one side or the other. You can see here that I kind of marked that little squeeze. And so they're going to tap for liquidity, and then they're going to pick their direction. All right. Now, again, this is another liquidity zone, but I didn't mark it because I'm not looking for the small move. This is the 1 hour chart. I am looking for that bigger move, which is here. Okay. That's what I'm looking for. That bigger move into this liquidity zone and back down to here. All right, so that's that. I'm going to end this video. It's been 7 minutes, and I will come back to you with some great tips on the next video. Happy trading. Show some love.